Palantir Technologies has recently experienced a notable decline in its stock price, creating a stir among both bullish and bearish investors. Last week, shares of Palantir fell by nearly 10%, which marked the company's longest losing streak in over 1 year. This downturn left many investors disappointed, while short sellers benefited by securing billions of dollars in paper profits. Despite this setback, the stock is still up more than 109% since the beginning of the year. This strong performance earlier in the year has created a split on Wall Street, with some analysts seeing the recent dip as a temporary pause, while others worry it could be the start of a deeper and more prolonged decline. Supporters of Palantir argue that the pullback has not damaged the long-term investment thesis. Bullish investors remain confident because Palantir is a data analytics company whose artificial intelligence-powered offerings continue to attract strong demand from both government and commercial clients. In its Q2 earnings call, the company delivered a striking report by announcing 48% year-over-year revenue growth. When analyzing Palantir's success, many experts point to two main engines driving its expansion. The first major driver is its government defense contracts. These contracts provide steady and recurring revenue streams, making Palantir's business model more resilient compared to many other firms that rely heavily on commercial deals alone. The second engine is the company's rapidly growing commercial artificial intelligence platforms. These offerings have been gaining strong traction across industries. For instance, one healthcare company signed an $88 million deal only a few months after adopting Palantir's artificial intelligence platform, which reflects the speed at which enterprises are embracing its solutions. This combination of government and commercial growth has positioned Palantir as a unique player in the artificial intelligence space. Because of these strengths, many bullish investors believe Palantir deserves its premium valuation, even if the stock experiences some short-term price swings. However, bearish investors strongly disagree with this perspective. Critics argue that Palantir is trading at levels far above what its fundamentals justify. Andrew Left, a well-known short seller from Citron Research, recently claimed that Palantir ranks among the most expensive software companies in the market today. Short sellers have benefited from the recent drop, collectively earning more than $1.6 billion in profits, which reinforces their conviction that Palantir's recent rally was driven primarily by speculative trading rather than sustainable financial performance. Those who are skeptical warn that Palantir's stock faces significant risks. If enthusiasm surrounding artificial intelligence cools off, or if Palantir secures fewer contracts in the future, the stock could face additional downside. Looking at analyst consensus, the picture is mixed. According to TipRanks data, Palantir stock carries a hold rating. Out of the most recent analyst opinions, 5 rate the stock a buy, 13 recommend a hold, and 2 suggest selling it. The average target price stands at $156.78, which points to a modest downside of about 1.23% compared to current trading levels. At the same time, several analysts remain very optimistic and have issued higher target prices. An analyst from HSBC upgraded Palantir's target from $111 to $181. A Citigroup analyst boosted their target from $158 to $177. Even more bullish, an artificial intelligence-focused analyst recently assigned Palantir a price target of $196, which many investors view as extremely positive. On the other hand, not all experts share the same enthusiasm. Rishi Jaluria from RBC Capital Management, which is a division of the Royal Bank of Canada, placed a much lower price target of $45 on the stock. This means that according to his analysis, Palantir would need to decline nearly 70% from its current levels to align with his valuation. What makes Palantir unique compared to many of its competitors is its history and positioning in artificial intelligence. Palantir has established itself as a leader in applying artificial intelligence to real-world scenarios. Its platforms are designed to handle enormous data streams, analyze them effectively, and provide actionable insights for users. Furthermore, Palantir has developed advanced artificial intelligence agents that help automate processes, allowing organizations to become significantly more efficient. A major advantage is its strong relationship with governments around the world. This stems from the company's original business model, which catered primarily to government clients. While Palantir has expanded aggressively into the commercial market, its government contracts remain a cornerstone of its business and continue to provide stability to its revenue. In Q2, Palantir reported that government revenue increased by 49%, reaching $553 million, while commercial revenue grew 47% to $451 million. These figures demonstrate the balance and strength of Palantir's dual growth engines. Beyond that, the company also stands out for its profitability. In that same quarter, Palantir converted 33% of its $1 billion in revenue into net income. Very few companies in the artificial intelligence sector are capable of producing profits at this scale while still growing rapidly, making Palantir particularly appealing to long-term investors. Despite these accomplishments, many analysts emphasize the issue of valuation. Palantir has indeed been on an extraordinary run since 2023, when the artificial intelligence boom began. The stock has risen over 2,300%, while the company's revenue has only grown by 80% during that same period. This large gap between stock price appreciation and revenue growth suggests that the company's valuation has expanded much faster than its fundamentals. At the moment, Palantir trades at 115 times sales and 241 times forward earnings. These ratios are extremely high by industry standards and reinforce the argument that Palantir might be significantly overvalued. A useful comparison is Nvidia, widely regarded as the dominant force in artificial intelligence hardware and computing. Nvidia has managed to triple its revenue year over year during certain periods, yet even at the peak of its valuation, Nvidia never traded for more than 50 times sales or 50 times forward earnings. Palantir, on the other hand, has not demonstrated growth anywhere near Nvidia's level, yet it is valued at more than double Nvidia's highest multiples. This comparison highlights how stretched Palantir's valuation may be. If Palantir were to trade at a 50 times forward earnings multiple, its stock price would need to decline by about 79% from current levels. Even if we assumed a price-to-sales ratio of 30, which is still considered expensive, Palantir would be worth about 74% less than it is today. This implies that years of expected growth are already priced into the stock. While it may be unlikely to see a full 70% drop as suggested by Rishi Jaluria, Palantir is priced for perfection and leaves little room for error. The market always looks ahead, and investors are betting on Palantir's continued success. There is no doubt that the company will likely expand its offerings, win more contracts, and continue its role as a leader in artificial intelligence. For cautious investors, waiting for a more attractive entry point may be the wisest choice. Essentially, Palantir Technologies has faced recent pressure, with shares dropping nearly 10%, marking its longest losing streak in over a year, yet the stock still remains up more than 109% since the beginning of the year. Bulls remain confident due to strong demand for its artificial intelligence-powered data analytics platforms and steady government contracts, while bears warn the stock is significantly overvalued, with short sellers already earning over $1.6 billion in profits during the recent pullback. The company reported 48% year-over-year revenue growth in Q2, surpassing $1 billion in sales for the first time, with government revenue up 49% and commercial revenue rising 47%. Analysts remain divided, with some offering price targets as high as $196 and others, like Rishi Jaluria, setting a target as low as $45, implying a potential 70% decline. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.